Good morning. I'm Jen Amos at Weiss Research.
I'm Andy Myers, and this is your morning market update for Thursday, October 6th. The global equity markets continue to rally this morning, but we are seeing stocks back off some earlier gains, especially on Wall Street. U.S. investors are reacting to the latest data on the labor market, ahead of tomorrow's big government employment report. The number of Americans filing for first-time jobless benefits rose back above 400,000 last week, an increase of 6,000. The gain partially reversed a big drop in claims the previous week, but it was a much smaller increase than economists expected. Meanwhile, the 4-week average, a more accurate gauge of employment trends, fell to 414,000. That's its lowest rating since late August, but still well above the level that would indicate a healthy labor market. Economists now expect tomorrow's jobs report to show an increase of about 60 to 65,000 non-farm payrolls in September, following zero job growth in August. The unemployment rate is likely to hold steady at 9.1%.
Turning to Europe, we're still seeing broad advances in the major markets, but stocks are well off their earlier highs. Some investors seem to have expected the European Central Bank to cut interest rates in what would have been a major policy reversal. Instead, the ECB decided to hold its key short-term rate steady at 1.5%. But in his monthly press conference, Jean-Claude Trichet did announce a new covered bond buying program and called on the region's banks to reinforce their balance sheets against possible write-downs on their holdings of sovereign debt. Those comments follow a report in the Financial Times yesterday, saying Eurozone finance ministers are looking for ways to recapitalize the banks. And today, European Commission President José Manuel Barroso called on member states to help the largest financial institutions get rid of any toxic assets they have. Meanwhile, the Bank of England surprised the markets earlier this morning when it announced another round of quantitative easing. The bank's Monetary Policy Committee voted to increase the size of its asset purchase program from 200 to 275 billion pounds.
That move by the Bank of England is having a major effect on the currency markets. The British pound is tumbling to a level of about $1.58, and we're seeing the euro's recent weakness continue as well. It's now dropping well below $1.33. Meanwhile, that relatively weak jobless claims report is causing investors to move out of U.S. Treasuries, pushing the yield on the benchmark 10-year note up to around 1.94%. And crude oil is giving up its earlier gains, now dropping back well below the $80 a barrel mark. Some of the biggest movers in the stock market today may come from the retail sector, as chain stores report their September sales figures. Among the winners is Target, which reported a 5.3% jump in same-store sales. But Gap had another rough month. Its sales slipped 4%, and the stock is moving lower in early trading. Overall, holiday sales may rise by a modest 2.8% this year, according to the National Retail Federation. That would be well below last year's 5.2% increase, but still above the average holiday season over the past decade.
The biggest advancer on the S&P 500 this morning is Constellation Brands. It's jumping nearly 6% after reporting a 78% increase in fiscal second quarter profit. The results topped estimates, and the company also raised its full-year earnings guidance. Constellation's most popular brands include Robert Mondavi and Ravenswood Wines, but it also sells spirits and beer. One big stock decliner today is Yahoo. It's falling 5%, giving back most of yesterday's gains following a report that Microsoft may be considering a new buyout offer for the troubled company. Yahoo rejected Microsoft's 2008 bid, worth close to $50 billion, and the company's market cap is now below $20 billion. And finally, shares of Apple are holding steady, following the death of the company's founder and former CEO, Steve Jobs. Jobs had been battling cancer for several years, and finally stepped down from his day-to-day role at the company in August. He was 56 years old. That's the latest from Weiss Research. Have a good trading day.